Well, hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter for March 23, 2024. Remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, the market, well, another fantastic week as the Fed reiterates their 3 interest rate reductions this year and another 3 for next year. They're keeping inflation down by selling securities from their balance sheet in order to reduce the money supply in circulation. And folks, the market just loved it and took off. And now this week, for our weekly analysis video, we're going over Watsco, which is a hot stock in the hot housing industry. The new housing market does not have enough inventory, and stocks like Watsco are shooting to the moon with the rest of the housing industry. And our ETF video, well, we look at the top stocks in our top 4 ETFs and find that on a compounded basis, these top stocks have outperformed the S&P 500 index by an average of 400%, or 4 times the S&P 500 returns over the past 5 years. And that's on a compounded basis, folks. These are fantastic portfolios. And when we look at the S&P 500, well, it is just pushing that top band up. And the red lines are the volatility bands. And we can see that on Thursday, the market closed above that top band right there. Usually what that means is we see a little weakness and then it shoots up to test that area once again. So things are looking good, folks. And down here you can see that the intermediate term indicator, even though it is overbought, it has turned up once again. So the market just loves to see that. That means they're gaining strength in the market. And when we look at the S&P 500 on the candlesticks, we can see that, yeah, this is the 20-day exponential moving average, and we can see the market just is at the above that, and we usually get a little reversion to the mean, so we might get some little downside action like we showed in the last slide, and then back up again to test this area right in here, folks. Looking very, very nice. And down here you can see the green lines. We see a lot of green lines over the past week. Green vertical lines represent the market when it closes up, the market volume when it closes up. And we can see the S&P 500 also turned up nicely as the other indices. Let's take a look at those. And when we look at the Dow, yeah, first thing we look at down here is this indicator, the intermediate term indicator, turned up again after this long period of decline. Even though the market went up, the market was starting to show weakness internally, but the big stocks were carrying it up. And here we are again above that 20-day exponential moving average. And you can see up here, this whole area, just like on the S&P 500, probably get a little reversion to the mean, but it looks like it filled that gap in here. There's a little gap in there, but it looks good. We just might see it come down to that 20-day moving average once again, but the market looks very nice in here. And the QQQs, finally, yeah, this down here, which had us worried, and that was because the semiconductors were having trouble, but now it has turned back up, and we like to see that, folks. Very, very nice. Exact same situation right up in here. We had a gap. We're filling that gap, and we might get a reversion back to the mean, but we're going to test that high once again for sure. And for our portfolio protection, last week our March put expired, and we went out and we bought the June 21 SPY 425 put. Notice that we started out buying the 410 puts, and then we switched to the 425. As the market goes up, we want to keep this protection about 12% below the present level of the market, so that if we do get some kind of sell-off due to exogenous events, something outside the market, we will be protected. And don't forget, we use our swing trading part of our portfolio just to gain a few dollars in order to buy the portfolio protection down here, because it can get expensive. But we put a few trades in every now and then, we get enough money to buy this portfolio protection. That's what the trading part of our letter is all about. It's not that we're a trading stock market boutique at all. but we do know how to trade a little bit and lightly just to get enough money to buy this put protection, which is very, very inexpensive at this point in the market. So, got to love it. So, folks, we had a very, very good week this week, a very good week last week. We've had a very good 3 months at the beginning of this year so far, and we can see the sunrise poking through those clouds with the market looking good, and so is this sunshine beating down on us and lifting all those clouds out of the sky. So, folks, you go out this weekend, you clear your heads, be with your family, be with your loved ones, and folks, don't even think about the market, because guess what? It'll be here next week, and so will we. See you then. Stay safe, folks.